deposits, and actually a lot of them went to their life insurance products too. So their new business value growth is actually very, very strong this year. In fact, we have a focus idea out early this year calling for a 10% beat in terms of their new business value.
Would this also apply to other players like AIA and Prudential?
Absolutely. So the AIAs and the Prudentials of the world, now, of course, they're pan-Asia, so they will get the boost from the mainland China business. But, of course, in the Hong Kong business, it's also doing quite well, as you're quite aware of, since the reopening. So not only that, actually, the Southeast Asia business is also getting a pretty good boost. Not as dramatic as the Hong Kong China business, but you're talking about high single digits, low teens in terms of new business value growth.
Stephen, thanks so much. Stephen Lam, Bloomberg Intelligence insurance analyst. Stephen Lam joining us there. Well, it's been almost a month since China signaled its intent for supercharged stimulus. Of course, we've been talking about it every day. Many investors have been disappointed, though, by a lack of concrete details. Bloomberg opinion columnist Shu Li Ren joins us now. So, Shu Li, we met in the hallway just a few minutes ago before the show. He said, when's the big number going to come? Should we be focusing on this big number, this fiscal number? And how close are we to getting one? Does it matter?
I think we should not doubt that a supercharged stimulus is coming. But the actual number itself is not going to come anytime soon because it seems like this round of stimulus is about debt restructuring. And it's very different from 2008 when China just said, okay, let's give some money to infrastructure building and then give workers give jobs to migrant workers. This time with debt restructuring, before you come up with a stimulus number, you need to know how much debt there is in the first place, right? So that means that we all know China's local governments have a lot of hidden debt.
They're off-balance sheet hidden numbers, right?
Yes, and by some estimates, the hidden numbers are bigger than local on-balance sheet number and the central government combined. So we don't know how much debt there is in the first place. We need to have a rough audit. And another thing is China is going to recapitalize the big banks, but we don't know how many corporate loans could go bad as well. So we also need to do some kind of checkup. That's why I think it's hard for China to come up with an exact stimulus number right now.
Yeah, and the question, I guess, for investors is, while they've been waiting for a catalyst to take advantage of the valuation gap with the U.S., and I think it's interesting timing there. And I think Goldman Sachs came out with a note, I think it was just this morning or just overnight, talking about how the S&P 500, that decade of above-average gains is over. I think this is the summary on our screens. And possibly, if we're looking at equity gains in the U.S. slowing, how should global investors now be thinking about China at this point in time, in the absence of a big number?
I think global investors have to be very patient. You cannot just ride on the momentum and say, okay, we are just going to get another 15% or whatever, because right now the market is already baking in the 10 trillion yuan stimulus number, right? So and then the actual number is going to come way later. And they have to take the mindset of value investing or even distressed investing. And they cannot take the mindset of chasing after the big tech, the Magnificent Seven.
One of the commentaries I've heard, while we wait for this number, right, is that possibly the big number, is a fluid concept. Chinese officials will respond if and when necessary, depending on how the economy responds to this as well. Do you think that's a good thing? That, the fact that we don't have a number yet is because, to your point, we don't know what the number should be?
I think at this point, the government needs to show their credibility to actually deliver the number. And by all estimates, 10 trillion yuan should be a fairly conservative estimate, because in 2008, they had 4 trillion yuan, and China's economy was much, much smaller. And back then, 4 trillion yuan was over 10% of the GDP. So easily, we are talking about 10 to 15 trillion. But the number is not going to come anytime soon. I just think that they have to do an audit. And it's a responsible thing to do as well. Like if they just say, okay, let's churn out 10 trillion yuan and develop the Great West, and people will say no, the return on investment is going to be so low.
Yeah. Right. I mean, this is no longer the same economy that it was 15 years ago that responds in the same way to a big number. Shuli, thank you so much. Fantastic piece there out of Shuli. Check it out on your Bloomberg terminal. Just some breaking news right now. Okay, so we have Central Huijin, that's the, one of the sovereign wealth funds, selling a record here. So let me just get that straight here. Okay, Central Huijin pricing a 3- and 5-year yuan bond, $29 billion. That's a record. And we now understand what the pricing is. So it's fresh issuance of, you have $9 billion 3-year debts and $15 billion as far as 5-year bonds are concerned. This is based on people familiar with what is going on. So the firm has at time, ETF market, okay, priced 2 local bonds. Its latest debt issuance, which is quite timely as well. We get this breaking news because at the top of the next hour, Goldman Sachs, actually the head of Asia credit strategy, will be joining us to talk us through really what all this stimulus means for, number one, the risk profile of this economy, some of the corporates as well, and what it also means for demand and supply of credit as hopefully the economy starts to respond to all this stimulus. Steve.
Yeah, that's right. I was just looking about what are the proceeds going to be used for this bond. Basically, the most recent bond sale proceeds will be used to optimize its debt structure. That's Huijin's own debt structure, replenish working capital, or for other purposes approved by regulators. So not a lot of transparency as far as what the proceeds are going to be used for. Coming up next, we take you to Singapore's International Energy Week to talk about the sustainability of the global transition with the International Renewable Energy Agency Director General. This is Bloomberg. That's the man on the screen right there.
Stephen, thank you very much for coming to speak with us today. We've been speaking with Stephen Sun from HSBC Qianhai Securities. Now, for more insights on investing in China, join our next Pro Talks tomorrow. Tanvir Gill will be speaking with portfolio manager Jason Xu of Radiant Global Advisors, who says, don't fight Beijing. This is exclusive and for Pro subscribers. If you are not a subscriber yet, sign up and get your questions in. Just scan the QR code on your screen. Street Signs. We'll be right back.
全服务中心已经开业。今天早上，小米平开。中资电讯股，中国移动公布3季度业绩，营业收入按年下降0.1%，净利润按年增长4.6%。今早中国移动低开1%。通讯基建股中兴通讯公布3季度业绩，期内营收按年减少3.9%，纯利按年减少8.2%，差过市场预期。今天早上跌幅在3%以上。至于港股后市，市场认为港股与A 股的估值有所回落，港股估值目前仍是历史相对低位，市场情绪修复是较为长期的过程。至于未来上涨趋势能否延续，取决于财政与货币政策力度。但同时，外围美联储开启降息周期，美国经济软着陆可能性增加，资金会流向部分新兴市场，叠加内地后续增量政策推出的憧憬，有望推动宏观基本面向上。策略方面，科技题材近期可以逢低配置。另外，高息稳健类品种作为长期关注的题材，港股上产品较多，也可以积极捕捉交易性机会。主持人，
我们先进一段广告，马上回来。 无论是初学者还是资深投资者，都能够在这里找到提升自己的密钥，让投资之路更加顺畅。现在呢，就下载第一财经有看头
I'm on that mission that I told you before we're going to do. We're going to change Qualcomm from a mobile communications company into a connected computing and AI company. And we're on this journey like crazy. One of the things we're announcing at the show is the continued progress we made on PCs, especially after our competition launched new products to catch up with Qualcomm on AI PC. We had the battle of the benchmarks here at the show, and we actually show that Snapdragon X Elite is still the performance king of the AI PC. We're busy trying to build that business for the company, and incredibly excited about the traction we're getting with PC OEMs, with PC channel partners, and I think that's going to be a big business for Qualcomm. In November, we're going to have an investor day. That's the first time we're going to provide financial metrics of how we think that business is going to grow, but that's what we're busy doing right now.
And staying with chips, Texas Instruments releases its quarterly report after the bell on Tuesday. Its products are used in a broad range of applications, including automotive and industrial. Analysts expected to post a drop in earnings and revenue from a year ago. Meantime, earnings from AMD out next week would give us more insight into AI-related demand. That's ahead of NVIDIA's report card due next month. And Daniel Newman is the CEO of the Futurum Group and joins us now live from Maui. It's good to see you again, Daniel. And of course, you're in Maui for the Snapdragon Summit. Tell us, what was exciting that you heard from them today?
Yeah, first of all, it's great to be here in Maui. It's never a bad place to be. Don't ask about the sweater, but when you're inside, it's cold. It's beautiful here. It's been a really exciting day. We are in these really interesting and exponential times right now. First of all, we've had a new competitor enter the market in the PC.
On long-term contract. So we have to work for a designer market that is more favorable for renewables that have a very highly cost upfront and then very low cost in the maintenance. And also the professionals. They are not ready to work, or at least they are not
devices.
enough.
It's giving greater productivity into the business and into the enterprise. And that's what companies are looking for. They're looking for choice. They're looking for performance. And they're looking to be more sustainable. And these new devices and this generation-to-generation improvement is palpable. So it was great to see it here. And of course, what they're doing with this Orion platform, this Snapdragon platform that they have with Orion going to the mobile device. And hey, I think it's even possible that this is going to be something we're going to hear more about automotive over the next couple of days as well, which I'm very interested in learning more.
Yeah, AI and EV, those are the two hot topics, of course, when it comes to chips these days. And we're hearing that customers, or I should say clients like Samsung, Asus Tech, and Xiaomi are signing on. What else are you hearing in that regard in terms of the artificial intelligence capabilities going into phones? What do you think that would look like?
Yeah, I think what we're really experiencing now is this movement from assistant to agentic. So what we're getting now is the ability for the device to handle multi-turn conversations and actually deliver, user experiences at the next level. I think we're going to see a whole new app economy coming out of the next decade. We're going to see an opportunity where the phone, right in the OS layer, you're going to be able to talk to, and it's going to be able to navigate and negotiate between different applications. It could be going in between, booking travel. You could get your hotel, plan a restaurant, and even, confirm schedule appointments. And right on the device, using these new GPU, NPU combinations, which are super efficient. And this is really exciting because what we're trying to do is, we're trying to lower the utilization of power. We've heard all about this nuclear energy that's being used in data centers. On-device can help that. And of course, we're trying to make people's lives better. And that's what the app economy brought. And I think that's what the agent economy is going to bring, taking all the data, all the great work that these app builders have done and creating agentic-powered apps. And you're seeing a preview of that here at the Snapdragon Summit.
Yeah, we were listening in on the interview with Cristiano earlier, and of course he did not respond to the question about Qualcomm Intel. But would this kind of combination, would it make sense for them?
I've had a chance to, review it, and of course, just like Cristiano said, it's always complicated with rumors. As I see it, I don't necessarily see this as the best path forward for Qualcomm. If they went down that path, there are some very interesting parts of the business, some ways that they could certainly benefit. The foundry business is super interesting, but Qualcomm seems to be on a mission. It's done really well. If you look at the pipeline it's built for automotive, how quickly it's entered the PC space, we're tracking that market, and they are making a meaningful inroads there. I think it would be a lot of dollars. And frankly, I actually think Intel's doing a pretty good job now that they've been able to separate the new governance structure that they're putting into place and what they've been able to accomplish with Foundry and with their most recent node, despite the fact that it's being built, this Lunar Lake platform on TSMC is going pretty well. So I'm not necessarily super convinced that that's the route that they're going to take, although it does make for really interesting, an interesting consideration.
Daniel, we'll have to leave the discussion there, but thank you very much for joining us today, and I hope you enjoy the rest of the Snapdragon Summit in Maui. Daniel Newman from the Futurum Group. Coming up, a Southeast Asian nation appears on track to hit its growth targets for the year. We'll be back with more details when Street Signs returns.
ADIPEC is where industries, communities, and nations come together to deliver the energy system of the future. ADIPEC. Be part of the conversation. Be part of the solution.
Salary negotiations are really awkward.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
If you don't fight for yourself, nobody else will.
Register at cnbcmakeit.com/salary. Special offer ends November 26th.
An advanced read on Malaysia's GDP shows a beat for the third quarter. JP Ong joins us with more details. JP, where did most of the support come from for the economy?
Well, a lot of it coming from the services sector this time around, Emily. And as you mentioned a while ago, the flash estimate or the advanced estimate for growth for Malaysia for the months of July to September coming at about 5.3% higher on a year-on-year basis. Now, that is lower than the 5.9% growth they posted in the second quarter of this year. But again, also coming off those high bases, especially we saw that big surge in FDIs coming into Malaysia during the first half of this year, buttressing that strong economic growth they're coming. Nevertheless, they are confident that the growth in Malaysia will still average above 5% for this entire year, and they're confident this will carry over, which thus brings us to the budget for Malaysia as well, which is meant to support this economic momentum that the country has seen over the last couple of months. About 421 billion ringgit in spending meant to be outlaid to support growth and social service initiatives, but they're also planning to cut the fiscal, some of the fiscal subsidies that they've extended to people by about 14%. Of course, where they're going to cut, of course, is going to be in the generous petrol subsidies that they've extended. Teku Zafar Aziz, the Minister for Trade and Industry for Malaysia, spoke to us earlier on Squawk Box as to whether or not they'll be able to rationalize these in an efficient manner and whether it'll be politically sensitive or difficult to actually rationalize these. Here's what he told us.
Subsidy rationalization is more towards giving subsidies to those who deserve to get those subsidies. So, for example, for petrol subsidy, 85% of Malaysians will continue to get that subsidy. So similarly, for all those other initiatives that we've done so far regarding targeted subsidies, many of those who deserve to get that continues to get, and I mean 85% of Malaysians will continue to get that, and I think people understand that, and we also need to ensure that money that we save being rechanneled towards other productive purposes, building more hospitals, building more schools.
So the idea is really channeling some of these the spending from the Malaysian budget towards more productive in more productive ways, and also lowering the budget deficit to GDP to about 3.7% in the coming year. Now, quickly, we want to take a look at Singaporean markets, which alongside the rest of the region is mostly trending in the red. They're down by about 1/3%. You'll see here they are down. We're seeing the Singapore dollar also looking a bit wobbly in today's session, and the IHS index also in the red. There is one stock that's doing quite well and weathering the storm impressively here in Singapore, and that is Seatrium, the offshore marine contract service supplier, said to have secured about 100 million Singapore dollars in contracts for repair of vessels across various for a variety of clientele. They're trading about 0.5% higher, but they're one of the few that are actually in the green so far in today's session. Of course, we'll have to wait for how the rest of Tuesday plays out, but so far they are one of the few bright spots. Oh, it's been a red start to the Tuesday session out here in Singapore, Emily.
JP Ong, thank you very much. Still ahead on street signs. We'll hear from Hungary's energy minister about the country's plans to meet its energy needs while fueling an energy transition. That's coming up next in the next hour of the show. Stay tuned.
市场零距离，稍事休息，稍后继续。
把握行业动态，洞悉市场风云，最及时的资讯，最权威的解读，市场零距离，专业创造价值。市场瞬息万变，是谁洞悉未见？汇证财经，中国证监会首批核准成。
Today's Forex Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
And welcome back. You're watching Hour 2 of the China Show. Here's a look at the CSI 300 a half hour into the session. As you can see, it opened up lower, but is now turning positive by about 0.4%. There's the Shanghai Shenzhen Composite, the 300, CSI 300. So looking, despite Wall Street's declines, Dave, it's looking like at least China is going up while the rest of the region is taking a bit of a breather like Wall Street did.
Yeah, you know, I was looking at turnover, and I think this chart is about to come up on your screen. So I think on Monday we had another
So on Friday, we had a 2 trillion day. On Monday, we had another 2 trillion day. And right now, as I speak, turnover about 30 minutes into, barely 30 minutes into the session, we're now at 610 billion. So we'll, and you know what, a little bit more, we're actually already at your year-to-date daily average. So this is a story that keeps giving. You know, we talked about insurers earlier on as a main really seen a main catalyst coming through from the markets. The other big group of stocks we're tracking today are these EV stocks on your screen, so really moving against the grain. JP Morgan placing XPeng on positive catalyst watch. You did see, by the way, overnight a fairly decent move as well across some of these names as well. So hence perhaps where we're tracking a follow-on move here in the Asia Pacific. Across the region, though, it's generally a day of losses. You had really big losses in Europe, followed by the pullback on Wall Street, and some of the big tech-exposed and tech-heavy and cyclical exposed, I should know because Australia's in this story as well, are seeing some declines. So Japan's off 1.5%, Kospi's off by about 1%. The ASX 200, 1.3%. Taiwan, which is coming off its lows of the day, 0.5% to the downside. Now, separately, of course, and arguably the bigger story, apart from the equity markets, is this bond bleed we're continuing to see in the region. So yields in Australia and Japan, as you can see on your screens, are up. We're seeing yields in the U.S. pull back a little bit, but make no doubt, of course, the big move that we had overnight, 10 basis points almost just about across the curve. And right now, it's the 5 and I believe only the 7-year, correct me if I'm wrong, are the only tenors that are below 4%. So 2 all the way to 30-year, as you can see on your screens, now have a 4 handle to this. And this is down, of course, to where maybe the Fed doesn't go. They might not do 50.
Well, yeah, that's why, you know, the S&P 500 overnight pulled back after, you know, a real nice run, 6 weeks of weekly gains for the S&P.
Longest one, I think, of the year.
Yeah, so there was a big chunk of gains, but there's a bit of fears of a, you know, overbought market, obviously, in the United States. Will it have 2 days in a row? It hasn't had that in a long time. So in 30 sessions, in fact, they haven't had 2 sessions of pullbacks of losses on the S&P 500 in 30 sessions. But again, a lot of that was due to cooling expectations of Fed cuts. This is what we heard from various Fed officials.
So far, I haven't seen any information that would suggest we wouldn't continue to reduce the interest rate. This is a very tight interest rate for an economy that already is on the path to 2% inflation, and I don't want to see the labor market slow further.
For me, to move quicker on the dots would be if we saw a weakening, like real evidence that the labor market is weakening quickly, then that would tell me, as one policymaker, hey, maybe we ought to bring down our interest rate more quickly than I currently expect. Right now, I forecasted some more modest cuts over the next several quarters to get to something around neutral, but it's going to depend on the data.
Mark Cranfield, out of our MLive team, joins us right now from Singapore. Mark, what's going on exactly here in the bond markets?
People are worried about this $100 trillion fiscal time bomb that Bloomberg was writing about this week. It's coming together because it's the week of the IMF meetings, and officials from there are going to be reminding all the central bankers who are present is that their governments are all overspending and they've got no plan to rein in their deficits, and that's what's really spooking the bond markets. And of course, when you look at the US in particular, you've got the US election coming up, and neither candidate is really putting on the table anything which suggests that there's going to be a lot of fiscal prudence coming anytime soon. So it's all kind of coalescing together just ahead of the vote, and people suddenly are spooked that bond markets are a dangerous place. But also, if you look at financial conditions, they're clearly loosening in the United States as well, which isn't going to justify the kind of rate cuts which are priced in to the US curve at the moment. So you've got Fed speakers as well, as you mentioned there earlier.
But away from that, of course, other things we are looking at today, as I mentioned, tech, of course, with some of these announcements. China very much waiting as we look into this election for any updates on those curbs to US investments around AI, but also any updates on those chip controls as well. So that's something that investors continue to keep one eye on at least. Em, I'll send things back to you.
Sam, stay right there for our next conversation. Kevin Carter is the founder and chief investment officer at EMQQ Global and joins us now live. Kevin, good afternoon your side, and thanks for joining us. As we've seen the stimulus announced from Beijing, markets in Hong Kong and China have bounced about 20% since September. Do you expect that this rally has legs?
Well, I don't have any near-term predictions on how the Chinese stock market will do, but I would say that, you know, having invested in the Chinese stock market for about 20 years now and been around it quite a bit, China was so out of favor over the summertime and you know, into a couple months ago that it wasn't just bearish, it was off of the table bearish. People didn't even want to talk about it. So I'm not surprised that there was such a strong move when the government finally announced plans to deal with the obvious mess they have in the housing crisis. But in terms of whether the near-term market movements can continue in China, I have no idea. But I think the market's definitely happy to see, and others should be happy to see, the government realizes they have a problem and they're trying to address it.
Is there anything in the Chinese market that you're curious to look into, be it is there any areas of growth that you're seeing?
Well, the growth in all emerging markets is in the internet space. And, you know, you have Alibaba, Tencent, JD, Meituan, these giant and very profitable internet companies, which have been buying back a lot of stock, which is now starting to show up in the earnings reports. And, you know, earnings growth, you know, matters to stock valuations. So that's where you should focus anywhere in emerging markets. Now, some of the bigger ones like Alibaba and Tencent, because they're so large, they can't grow as fast as some of the smaller ones like Pinduoduo and so forth. But if you're going to invest in emerging markets, the internet companies are definitely the place to be.
Yeah, very good morning to you, Kevin. I mean, I'm keen to get your thoughts on, you know, the sort of China problem that a lot of these companies have been flagging in their earnings reports in recent quarters. And, you know, I mean, you had David Tepper saying buy everything China. But, I mean, as far as playing the China story outside of some of these domestic names here, how are you looking at that, given the stimulus that we've heard and the excitement around that? I mean, the level of sort of exuberance that has come back to this story?
Well, again, I think it's important to measure that exuberance relative to where we are in the China story and the China stocks over the last, you know, several years. These stocks are still at incredibly low valuations. Before the, you know, different packages were, you know, offered up by the government, they were selling, in the case of Alibaba, at 5 times earnings if you took out the cash they had. And again, they're deploying that cash into buybacks. So these stocks were very cheap before. They've come up a lot. They've sold off, I think, you know, after the initial big rally, but they're still very cheap. And I think, you know, there's certainly, you know, buys for long-term investors, but there's so many ongoing issues with China. I guess probably most importantly is all of these different things that they've announced in the last month, you know, will they work and how will they work? And that remains to be seen, because China really does need to get its real estate situation fixed, its consumer sentiment back, and growth back in the positive direction.
What about your thoughts on this whole overcapacity concern from the West, and particularly given, of course, some of the rhetoric we're hearing stateside from both, of course, the candidates with regards to tariffs, and particularly from the Trump campaign, and particularly some of the stronger voices and more hawkish voices on China around chasing Chinese companies in third markets that seemingly they believe are going through the back door?
Well, let me say the following about this. So it's pretty clear that China now has the capacity to make a whole lot, like millions more than they even need, a whole lot of high quality, low cost electric automobiles. And, you know, you would think this would be something positive for the world, but, you know, for a number of obvious reasons, it's threatening to a lot of places. And so I don't know how it's going to play itself out. And frankly, you know, when I think about, okay, sure, we're going to address the housing issue with all the different things that have happened recently, but this is another issue that seems to me that is going to, be in the papers a lot more in the coming months, because China now makes incredible high quality, very low cost electric vehicles that, without tariffs, people would buy a lot of. But now we're seeing efforts in the United States and Europe and other places, for right or wrong, to put tariffs on these to keep, their local manufacturers competitive. So I don't know how it's going to play out, but it's definitely an issue, and I'm glad you brought it up. But I don't know how it's going to, resolve itself.
As we look at the electric vehicles and the adoption of this technology, if you want to call it that, do you think that this type of geopolitics, the tariffs, will hinder the uptake of the electric vehicles to pure electric? Do you think that people will continue to focus on hybrids instead? Do you think it would derail the EV uptake?
I think the answer is yes. I mean, if you put tariffs on things, and something that, you might be able to buy for $12,000 now costs, $25,000 or whatever it is, you're less likely to buy it. So I think, to the extent that those are to my understanding, the best quality and lowest price electric vehicles available, if we do things to make the prices higher, then the adoption probably won't be as high. So I think it's definitely, an issue the world's going to have to grapple with here. It's certainly not my focus, but I do recognize it as, something that's going to be important, especially in the situation of discussing China, in the coming year or so.
Have you got any thoughts, Kevin, on sort of the regional rotation out here in Asia? Given what we've seen, I mean, there seemed to be a lot of interest in piling into China initially, and now perhaps investors are having second thoughts about that. I mean, we had the Tokyo Exchange, for instance, sort of suggesting last week that this was perhaps on the top of the list as far as those investors wanting to move money out of China. What are you seeing on that front?
Well, I have to say, first of all, it was, the 5 weeks, whatever it's been since the announcement, it's been a classic case of, as Warren Buffett would say, Mr. Market. I mean, you saw the chart go one way, and people's sentiment, immediately turned, at least seemingly. And I was on the road in Europe talking to investors about India during this period, so I got a lot of real time feedback on the situation. So, look, China's been really cheap. People know that, and I think they've been looking for a reason to maybe get back in or take advantage of the cheapness. And in the case of the India story, look, India is the best emerging market that the world's maybe ever had. I mean, where India is right now, it's everything that an emerging market investor could want. It's the biggest population ever. It's the youngest population. It's the fastest growing economy. That's driving consumption. You add in the human capital and the India stack, and, there's reason to be excited about India. So I don't think it's that, India or China. I think you want to own both of them if you're in emerging markets. And China is an amazing place, and it's done a whole lot to advance, especially on a technology standpoint. And it's very cheap. But the real growth going forward is going to be in India, and that's going to go for, at least 10 and probably 20 years. And so investing in digital India, I think, is really what investors ought to be thinking about.
I will ask more about India in the next segment. Kevin, stay right there. Kevin Carter of EMQQ Global stays with us. And Sam, thanks for your participation.